Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. We're looking at a one-year daily chart of the Russell 2000 index, which is a more broad-based index for the small cap stocks. And the reason I'm starting with this and not the diamonds, which is the Dow Jones Industrial Average ETF, is because we've had a major breakdown in the support level that I identified last week in the market report. You can see here that we had a very close signal, which was the bearish engulfing pattern yesterday, and today we closed significantly below the low of that engulfing pattern. Now, this is what's most interesting. When you have a close on a Friday that is right on the low, you can see here there's no shadow underneath that candle. It closed right on the low. That tells us we ran out of time. We didn't run out of sellers. And if we had a little bit more time, chances are this market would have dropped even more than it did on the close for Friday here. So this is a very bearish signal. And when I look at the weekly chart for the Russell 2000, you can see that we've broken down below the neckline of this complex head and shoulders pattern. If you're not familiar with head and shoulders patterns, then go to the Market Guys website, click on the video link, and there's a very short video in the library that talks about head and shoulders patterns. It's very important that you understand this topping pattern because it's extremely accurate, especially after it's found in a long-term trend, or at the end of a long-term trend. This is a very significant down candle. A big long red candle on the weekly chart tells us watch out below. So before you panic, understand that there's opportunity on the way down. There's many exchange traded funds that will go up in value as the market drops. They're called bear funds. There's some leverage funds that you can get into. Be careful with those. Check with your broker before you actually put your money into those. But you can make money on the way down. For those who are option traders, this is a time where you can start buying puts and capturing profits again while the markets drop. So that's the Russell 2000. If you look at the Qs, this is the NASDAQ market again on the weekly chart. You can see that I've left my lines up here from last week's report. And what I forecasted was a downward move to test this fan line right here. Now, what's interesting about this in the NASDAQ, again, is that this is a very long red candle on the weekly chart, but it's a bearish engulfing pattern with no shadow underneath, and it's on very high volume. So this tells us that the sellers are very much in force here. They're in control. And if you're holding on to any long positions, you could actually get hurt. So my advice would be watch the downside. Keep your stops very close if you're not out already. And look to position yourself for a move lower. Now, as we look at the spiders, this is SPY. You can see that what's happened is, again, I identified a 7-year cycle line last week. Remember, this is a weekly chart that I'm showing you, and this line, which I drew last week, is the 7-year cycle, which for the past 14 years, when we've hit this line, the markets have gone down. Now, if that doesn't get your attention, then nothing will. This was my forecasted trend line for what I think is going to follow, and this is another bearish engulfing pattern on the spiders. If you look at the monthly chart, now again, I'll show you the cycle lines here. You'll see that, again, this is every 7 years the market has reached the top. And this week we hit that and we're showing a bearish engulfing pattern. So you cannot ignore this at all. In fact, what's going to happen is that the fund managers are going to start to move out of their positions to manage risk. We've also broken down below the monthly trend line for the spiders. You see this trend line right here that I drew today? And for this week, we closed below that trend line, so all bets are off for any long positions. We are no longer in an upward trend. We are now identifying ourselves with a bear market, and we're positioning ourselves accordingly. Finally, if you look at the VIX, this is the volatility index. This measures the activity level, the emotional premium in the market. I mentioned that if we were to close over the resistance point, again, that would be a very bearish signal for the overall market. Remember, the VIX is the volatility index for the S&P. Look at this candle. This is absolutely tremendous. It's a bullish engulfing pattern on the weekly chart for the VIX, closing over resistance. Folks, I cannot stress the importance of what we're seeing here. If we close over this resistance point, you could very well see one of the biggest sell-offs we've seen in years. We just touched that resistance point, and it looks like we did not close over it, but I'll tell you, next week, if we start closing over that line, watch out below once again. The Market Guys are known for providing premier educational content for investors and traders, and we teach people how to read the charts. If you're interested in getting some stock picks from us, we have trade alert services that are very inexpensive. Feel free to go to our website and check that out. But for now, make sure you keep your stops in place. Make sure you're watching any long positions for risk. And I would absolutely suggest you start taking some short positions here so that you can make profit on the way down. Have a great weekend. So long.